Hey guys, what's up? It's Frank. Since I've gotten into real estate investing, it's gotten popular, the BRRRR method, right? It's buy it and basically renovate it, refinance it, and get your money out. And most of the people who talk about the BRRRR method are talking about $50,000, $60,000, $70,000 acquisition rental houses that they get the money out of. That of course works, and we were doing it way before there was a fun acronym. The point I'm getting at with this is this. We were doing it before there was a fun acronym, and now we have more than 300 of these houses we BRRRR'd. But if you do it right, you don't have to stop with single family homes. What this call that you're about to watch is about is BRRRR methoding a $5 to $7 million retail building. So it works with a $50,000, $60,000, $70,000 rental. It works with a $10 million commercial building. The process is very similar. The thing you have to worry about in this is that the banking terms have changed. Instead of a small little bank, it's a big bank. So you have to prepare and you have to do things a little bit different. But if you follow the steps and you do what I'm going to show you in this call, you can BRRRR out, basically be cash neutral on a $5 to $10 million building or more. And if you do it really well, and you bought it right, and you do your banking properly, and you do your construction with edge, you can get millions of dollars in your pocket. So, here we go. Andre, how many square feet are the two buildings we're talking about?
Together it's like 37,000.
That's the right number. And what did we say yesterday, 163 bucks a foot?
That sounds about right.
That was real close. What was the square footage again?
Total is 37,264.
So this building has the ability to be upwards of $6 million bucks. Like if I would say put a cap on it, I'd say 6 million is the number on the top end for value. We've got the ability to pull $2.1 million in cash out of this deal or have upwards of $2 million in equity one way or another, and that's at a 75% LTV, and we can most likely get better than a 75% LTV. You handsome tardy mother.
What's up, buddy? You called me, dude, you called me early. You called me like 8:28. I'm like, what's going on? Oh, 9:28. I'm like, that's, doesn't he know that I'm like gonna be running late or what?
Well, it's 9:43 and I got 6 people on the phone. Are you jumping into Zoom or are we gonna here? Yeah.
It's not just you and I? Okay, I thought Carla wasn't out. Okay, I gotcha.
Carla stops the world for you. I don't know if you understand this. Like she's like heaven and earth. She moves for Lugavoy.
Here, is this the one? Okay, sorry, I have something from August. This is the one, the usual Zoom, right?
So, all right, log in. I just emailed to you. Look at your calendar. Do you have it on 9/17 or no?
Hold on.
Where'd you get your MBA?
Yeah. Geez, it's not. Oh yeah, here we go. I have it 9/17. Yes. Okay, got it. Did you the man? I don't know why I went back and erased everything from today backwards, but I got it now.
All right, can you see my screen?
Yeah.
All right, so here's what we got. Andre ran this for us yesterday. So here's what we came up with, Alex. This thing is 37,264 square feet. We think it's 165 bucks a foot. That's the same value we got on the other buildings. So that takes us to a value of 6.148 million. The purchase price is 887, which leaves us with 4,339 in renovation costs to get us to 85% loan to value. I don't know how to not leave a couple bucks on the table. I mean, if we can get this much out of it, we're gonna really get this thing lean. I think that's very safe. I use 1750 for everything but the basement. So Andre, look what just happened. So we just went from a 6.14 debt service coverage ratio to reality, because what we're looking at on this thing is the aftermarket value. So what I put in is the 165, and 165 is how we pro forma'd it. And if you look at this number, that's going to tally up, which is the same number we came up to before. So what happens with this, your cap rate is your NOI divided by your market value, or our appraised value of 6.1. So if we were able to do this, we got 7.7 million or 7.7%. I think that thing easily trades at that. So I think this thing is a bunch of green shoots.
What would you say a perfect cap rate would be? Or like, what is the ideal?
So it's changed drastically in the last couple of years. I would think office complexes 2 years ago were between 7 and 8.5. I think office complexes today are between 4.5 and 6. All right, here's what I think we should do. Alex, I'm at CG next week, so you're not going to get much of me. I think you, Carla, and me should hang on the phone for 7-8 more minutes, knock two, 3 things out. I would like to say goodbye to Andre, because I don't think he needs to stick around for this. But I want to show you a couple things real quick, Alex.
I got this 10:15 Zoom that I'm
that it, and this is with like a city council. I don't want to be late. Can we do this like at 11:30?
Hold on. Yeah, but we want to do 11:30?
Yeah, 11:30.
I'll send you an invite. What I want to do when we come back is I want to talk about my select, Fred, and I want to show you what I'm coming up with on a profit line because I'm going to sell a couple of things based on what we talked about yesterday.
That sounds good.
All right, see ya. Bye. Hey guys, guess what? It's me, and I'm still following you around the internet. So guess what? It's time. Let's take this relationship to the next level. Like, click, do something, engage. Tell me, hey, I see all your videos and you suck. That's fine. Or tell me this is helpful or talk about this. Whatever you want, I'm here to do it. So please engage. See ya.